I'm Tom Anderson, a senior business advisor with Ferguson Alliance, and today I'd like to visit with you just ever so briefly about the role of a third-party commercial insurance program in your risk mitigation solutions. So traditionally, business owners and family business owners are no exception, have looked to third-party insurance providers as their primary resource for business risk mitigation. It's come to my experience, though, that much too often these decisions about using third-party solutions are made well before a really complete understanding and robust level of risk assessment is completed. It's a very important process because it is intended to not only define which risk you have, but also what are the ones that are most concerned, and also reconciling against those risks what the possible or probable claim levels can be. So too often family business owners and others as well insure things that they could easily or should easily be willing to self-insure, thereby paying a premium for something that is more expensive than what they should be willing to underwrite. In the effort to identify that which you should use your third-party commercial insurance for, it's very important to have a good risk assessment. So that's how you avoid having either too much or too little reliance on the third-party insurance solution. And those kind of decisions, too much or too little, are not cost-effective and certainly not a good solution. So often the reality sets home when there's a non-typical loss, or when insurance rates spike significantly, that people discover that they missed something in their insurance, or they were insuring things that really weren't necessary to use third-party insurance for. They could use an internal reserve in their accounting, and in effect, something like you would do for bad debts. You have a reserve for those very often, but you can do the same thing for insurance. So it's important to recognize that the insurance markets, the risk insurance markets, are more complicated than ever. And that is why you must remember that when you use a same as last year type complacency about your commercial insurance program, you may be well risking the entire economic value of your equity in the business. Don't make that mistake. If you'd like a partner in understanding and determining such often unfamiliar solutions in your business, reach out. We work on these issues often, and so book a call with one of our advisors, and we'd be glad to give you more guidance. You can find us on LinkedIn or at ferguson-alliance.com. Thank you.